Hi, Synopsis Conference. How are you? My name is Dave Uhryniak. I lead ecosystem development here at TRON DAO, and it's a pleasure to be here, even virtually speaking with you. At TRON, engaging with our community is always of the highest priority, and we work to get out into the world as much as possible to talk with people at conferences, at all types of events. And we're very glad to be here today. So today, I wanted to talk with you just a bit about what Tron's been up to over the past year, and talk to you about some areas that we think are going to be pretty interesting going forward. So since last October, we've been pretty busy. New accounts are approaching 190 million, which would be a really significant milestone as we climb towards 200 million. Market cap is probably still over 7.5 billion, and it's always moving around, as they all do, as you all know. And transactions are now over 6.5 billion. But since last October, we've grown new accounts over 65%. We've averaged, nearly 2.5 million daily active accounts, which is pretty amazing in the crypto space. Our market share of all stable coins is over 35%, if you can believe that, which is pretty amazing. And we've also haven't rested on the product front. In July, we launched a new product. It's our first tokenized real world asset. And it's really a bridge between TradFi and blockchain. And it's connecting crypto with traditional assets. And it's really, think about it as a tokenized money market, right? So it's our first push, a formal push into that space. But I think you're going to see a lot more from Tron in the tokenized real world asset space. So today, I just want to talk with you about payments overall. Right, so we're going to take a look at how payments are currently made throughout the world. We'll look at what's happening in the stablecoin markets, and then from there, I want to talk about the Web3 payments model, and then we'll get into some adoption catalysts, go through regulation, and then we'll wrap it all up here. So it should be hopefully pretty interesting, and thank you for listening. So let's talk about the payment market, right? Global payments for banks, traditional payments, is a huge market, right? It's approaching, in 2022, it was over $2.2 trillion globally. And it's growing it's expected to reach over 3.2 trillion in just 5 years. And these are estimates from McKinsey, right? And payments contribute 40% of total bank revenues. So it's a significant market, and it's a significant business. And, it's something that banks around the world want to protect, right? This is a very significant part of their business. So, how do they protect this when there is not only disruption coming, but there's really a new way that's better, faster, and cheaper of making payments than their old way, right? They really face a significant challenge. But I think the stablecoin payment wave is going to be difficult to hold back, right? So how do they make all this money? They make it a little bit at a time. So when a consumer goes to a merchant to buy something, right? There's really a lot of things happening in the background there. The transaction being sent, there's 3 or 4 different other intermediaries and people that need to sign off on the transaction and verify this and verify that. And they're sending codes and sending requests. And for this, they charge, somewhere between 2.2% or so and 3.3% or so. And it's not fast. I mean, don't get me wrong. The current payment system is a miracle. You can go into any place around the world and purchase anything with a card and walk out with it, and it's great. But it does have drawbacks in this new world, right? It's slow and it's expensive, and there are quite a few intermediaries in this process. And the new Web3 world is a world without intermediaries. So I think, oftentimes, I think what you see now are intermediaries trying to find a place in a world that doesn't need intermediaries, which I think is an interesting situation. And it's kind of interesting to watch evolve. But ultimately, we're going to get to a place where, and this is all enabled by blockchain, where a transaction only has to be between the person that is buying and the person that is selling, right? So digital transactions will actually be very similar to a cash transaction, and that's really the entire model. But we have to work to get there, and it's still a long way off. And a big part of that is going to be stable coins. So when you think about stable coins, you might say, well, do people even use stable coins? What do they use them for? Well, the transfer volume of stable coins has exploded since 2018, right? The people are using stable coins for a variety of uses and transactions, and the transaction volume is now just about equal to where the major credit cards are. And as the stablecoin market grows, it's definitely likely to surpass those transfer volumes of the major card networks. And people use stablecoins for all types of things: payments, remittances, liquidity, some savings, lending, staking, even gaming, all types of things. So stablecoins are definitely being used. And I think all of these areas, all these current uses, are going to continue to grow significantly, right? And when you look at what the stablecoin market cap is supposed to do, obviously in 2023, it's been a bit of a setback, but from this current level, it's supposed to grow, or it's estimated to grow to nearly $3 trillion, right? And what's it going to be used for? Payments, tokenized markets, and that's real world, tokenization of real world assets. That is going to be a massive market. Estimates range anywhere, depending on what you look at, from 5 trillion to 30 trillion. And so, stable coins are going to play a huge role within that, and then payments as well. So it's when you start to think about all of these uses for stable coins, I think it's easy to see how it gets to the 2.8 trillion this person estimated it to be, and could even surpass that. So not only are stable coins being used now, as we saw in the transfer volume, but they're going to be used even more going forward, right? And that's really going to be significant to the overall payment market, right? And what would that model look like, right? As we talked about before, stable coins are going to enable digital payments that are very similar to cash payments, in that there are only two parties involved in the transaction, instead of the 4 or 5 intermediaries that need to be involved in a current digital transaction. So you'll have the wallet holder connect with the merchant and their wallet, and right away, right, the transaction is done. It's instantaneous, it's secure, it's much lower cost. And I think low cost is going to be a really big driver, because every merchant hates paying those credit card fees. You always, a lot of merchants, they'll give you a better price if you just pay cash, at least here in the US. They're going to be interoperable across chains, direct between two parties, and you're going to be able to use a variety of tokens. So, let's say many of you in the audience probably hold a variety of tokens in your wallet already. Some you want to spend, some you want to hold. You'll have that ability in this evolved payment model, right? And I think that's really where we're moving to. That's where the world is moving to. And I think it's going to be a much, much better model for everyone. So what's going to be the drivers of this? I really think there are three things that are going to drive adoption of not only payments, but Web3 overall, right? And it's business model evolution, adjacent technologies, and global personal capitalism. So let's start with business model evolution, right? I think as companies around the world, and these are large enterprises, traditionally Web2 companies, they're going to view, or they'll begin to view Web3 technologies, including payments, as tools to improve their competitive position. Now, we haven't seen a lot of this yet, but I was kind of working on this the other day, and I think, when you look at how Tron has been adopted and how we've grown to nearly 190 million accounts, our adoption comes from people that have serious need for a way to improve their lives, right? So we have great adoption in a variety of markets where their home currency might not be stable, where they're very inflationary. One thing I like to say is where there's trouble, there's Tron, right? And in those markets, we have really good adoption because people want to get out of their home currencies and into a stable coin to preserve the buying power of their hard-earned money, right? So now, take that same idea of need from crisis and apply it to enterprises. And I think, as at least here in the US, we continue into this recessionary period and it accelerates. And you see corporate earnings begin to slow or even fall. And companies have they're always looking for needs to improve efficiency and grow revenue. I think that's when they really begin to adopt Web3 capabilities, because it is going to provide an advantage. It will be efficiency first, but then there's other competitive advantages, such as being a first mover in some of these areas to develop that competitive advantage. There's better consumer engagement by offering more options for payments. There's really a whole host of competitive benefits from offering Web3 technologies. And I think, unfortunately, recession times, tougher times for business really drive that adoption. So I think that's what we're likely to see and what we'll expect going forward. Now, adjacent technologies, these are things like IoT, AR, VR, even AI, even mobile. These are all integrating payment capabilities into them as well, right? Or many are. And as they integrate payments, so like IoT, I know there are vehicles now building in IoT, and one of the things you can do with that IoT from your car is make payments. That's awesome, right? I don't know what I'd use it for, but I want it. And that's really cool. And I think you're going to see a lot of that happening, and that's going to further the adoption of these capabilities. And lastly, there's something I like to call global personal capitalism. And what that is the ability of consumers globally to protect and monetize their activity, their information, and their capabilities. And that is really brought forth by the evolution of Web3, and particularly NFTs. All of their activity online, all of their personal information from social media posts to healthcare can be protected. It can be turned into a non-fungible token. And that ownership of that token allows new markets to be created where they can trade access to their online activity, to their healthcare records, to a host of other things for payment, right? And it kind of they might be micropayments, but it's democratizing capitalism and bringing it to everyone around the world, mostly, even to people who didn't before have access to this type of ability to trade their own information. So I think that is going to be a huge driver as well of Web3 capabilities and Web3 payments. Now, regulation. We know that regulation is playing a huge role in Web3. Certainly here in the US, we've been struggling with regulation for the past couple of years. And it's really, personally, I think it's really putting the United States at a disadvantage. This lack of regulatory guidance, this unwillingness to make rules, that's probably a different presentation. But it's really hurting us. And where we're seeing growth is in the areas where there is regulation. So from Singapore to Japan, to the UAE, to Europe, these are markets that are doing quite well as they roll out their regulation. So for example, let's take a look at Japan, right? Japan came out with some stablecoin regulation. I believe it was in May of 2020. It's been 18 months. Now we're seeing an explosion in projects for stablecoin payments, right? Large banks are participating in, projects to issue stablecoins in yen. Hokuku Bank, I think I said that correctly, is adding a deposit-backed stablecoin by year end. They're rolling out their own wallets, right? These are really new ideas that are coming because regulation supports it, right? There's this digital asset co-creation consortium called PROGMAT. It is really interesting. I think you should all go look into it, actually. They're tokenizing real-world assets. They're going to create stable coins, and it includes over 200 companies. But this is one of the things that's going to spur that innovation and that need for stablecoin payments, right? And this is going to help to transform the payment system globally, even though it starts small. And I think, it is starting small here, but this is why I say that stablecoin payments and Web3 are a wave that can't be stopped, because there is adoption. And this will reach levels of mass adoption over the next few years in places that have developed the right regulation or the right guardrails to foster it, right? People in crypto and blockchain are very creative and very smart. And if you give us some guidelines, we'll figure out how to work within those guidelines and still create really new, interesting products and projects. So, this is I think what's being done in Japan is very exciting, very innovative. Hopefully you see it more throughout the world. And I think you will. So one last thing. This is a big supporter of Tron. His name's Prince Ajay, right? He is in Ghana. And what he has done in this picture is he just made a purchase of a phone using crypto, using stablecoin payments at a local shop there, right? So, it's happening globally. This is something that really is going to continue to grow, and you're going to see more and more of. But, it's like I said before, this is a wave that cannot be stopped. And stablecoin payments are really the way of the future, and they're better. Everyone will be better off because of it. So that's all I have for you now. But if you have any questions, you can reach me at my email or find me on LinkedIn. But thank you for letting me talk with you for a little bit today. Enjoy the conference, and let's keep building. Thank you.